Thomas Hayes. He is the chairman and managing member of Great Hill Capital, an equity manager based servicing accredited investors and qualified institutions. He also has a weekly podcast called Hedge Fund Tips with Tom Hayes, where he shares his market insights. And he's going to join me as my guest host for the hour, answering my questions, the audience's questions, and of course, asking questions to some of our guests. Tom, great to have you in.
Thanks
really
for having me, Maddie.
it.
Happy to be here.
So we were just talking about how you do a great job of getting questions in from your audience on your podcast and answering some of those questions. What would you say is the single biggest question you've gotten over the last week or two?
Well, I think people are a little bit concerned about the uncertainty of the tariffs. How long is this correction going to last? When are the lows in? And I think this time it's a little bit different than people worried about the great financial crisis, people worried about the tech wreck. Is this going to continue to cascade? This is man-made. This is not a function of multi-year buildups like you saw in the late 90s with the tech exuberance. It's not a function of excess in the housing market like you saw with the great financial crisis. This started with a tweet. It could end with a tweet. One day you could wake up and you see this beautiful tweet that says, I just got off the phone with Xi Jinping, and the market rallies. Two analogs I'm looking at, Maddie. First and foremost was Trump 1.0 trade war. We had a 20% correction in 2018. It took 4 months to recover to new highs. And then if we get a little more volatility with all the negotiating, we go back to 2011 and look at the European debt crisis. We have some debt rumblings here with US Treasuries. That took 3 months, and it was extremely volatile. However, once you nearly touched that 20%, the bottom was in. So we're pretty sanguine and pretty constructive to buy stocks at these levels.
And are you suggesting buying stocks kind of across the board, or are there certain areas investors should look at more than others?
Well, I think it's what you want to get in terms of return. So we look for some of the beaten down sectors because we want to get excess return over time. One of the groups that we're looking at is home builders, believe it or not. You can't give them away right now, but we like a gentleman named Brad Jacobs. He wrote a book, How to Make a Few Billion, and it's useful because he actually made a few billion, and he's put $1 billion of his own money in his new project called QXO. This is a building supply roll-up play. If you had invested with him in the past, whether it was United Rentals, if you put $1 million in when he got involved in 1997, you made $79 million to date. If you got involved with XPO Logistics when he got involved, he put $150 million in 2009, you would have made something like $160 million, 160x. So we want to bet with him because the trends are there. You know, as a millennial, everyone's looking to buy houses. They're waiting because rates are high and there's not enough supply. There is a 4 million unit shortage. And as we know, Trump is going to open up federal land. So not only do you get your starter home from KB Homes, you get an endangered elk in your backyard free of charge. But the fact of the matter is supply is coming online. He's going to benefit, and he started off with a company called Beacon Roofing. Everyone needs a roof. When your roof is leaking, it's a non-discretionary expense. You don't think about, should we plug the roof? We replace the roof immediately. He bought it at 10 times EBITDA. He kind of paid up, but he's going to add technology as he always does and double EBITDA over the next few years.
And I know another name that you're looking at, CRK, I believe?
Yeah, Comstock Resources. Well, guess what? Not only do we have negotiations with China, we have negotiations with Europe. And what do we want to sell Europe? We want to sell Europe our LNG. And Comstock Resources is controlled by Jerry Jones, who also owns the Dallas Cowboys. He's an oil and gas legend. He owns 70% of the stock. We got involved around $9. It's doubled. However, if you look at proven reserves of this company, they're worth about what enterprise value is now, but the real value, the real unleash is unproved reserves. They've got over 15 years of drilling that's not recognized in their financials because they're only required to report PV10. So we think from these levels over the next 24 months, this stock can not only, it's already doubled since we started talking about it. We believe it can double one more time over the next 12 to 24 months. So we love the LNG play. We know Europe is going to start taking a lot more of our gases in exchange for tariff mitigation, and it'll be a very good thing.